Good afternoon, everyone, and thank you for joining us today. My name is Dave Lawson, and I'm thrilled to be hosting today's webinar on behalf of Strategic Wealth Preservation. For those of you who may be new to SWP, we're an international precious metals dealer and secure storage provider, proudly headquartered in the Cayman Islands, with vaulting options around the world. Today marks the beginning of something special as we launch an exciting new partnership with the Royal Mint, a globally recognized institution with more than 1,100 years of history. Through this partnership, SWP clients will now have access to a curated selection of bullion products from the Royal Mint, combining British heritage with trusted quality. We've put together a fantastic lineup for you today, featuring some of the most knowledgeable voices from the Royal Mint. First, we'll take a walkthrough time with Chris Barker from the Royal Mint Museum. He'll guide us through the incredible history of the Mint, from medieval coinage to modern-day innovation. Then we'll hear from Stuart O'Reilly, market insight analyst, who will share real-time market intelligence and discuss the latest trends shaping the markets today. After that, business development executive Louise Edwards will give us a look ahead at what's coming for 2025, including exciting new product launches and the official reveal of the brand new secure Britannia Bars. We'll have a Q&A towards the end and be joined by business development manager Patrick Hurley. So feel free to drop your questions in the chat box throughout the session. We'll do our best to go through and answer them as we have time. Now, without further ado, I'm delighted to introduce Chris Barker, who will be starting us off with a rich and fascinating history of the Royal Mint. Chris?
Thank you very much for that. And well, good afternoon or good evening, depending on which side of the pond you're on. I'm Chris Barker, and I'm, as introduced, from the Royal Mint Museum. And I'm very much from the history side of the Royal Mint. And it's our job, really, in the Royal Mint Museum to look after and curate the Mint's history. And as was alluded to, we've got quite a long one, over 1,100 years worth of history. And the reason why we make that claim is because we trace our origins back to the reign of Alfred the Great. So we don't actually have any documentation or any written evidence to say when the Royal Mint started. But we do have coins like this, coins of this type. And we can see on the obverse here, we've got Alfred, a rather stylized depiction of Alfred the Great, King Alfred the Great, the split inscription, Alfred, running across the coin there. And then from the Mint's history point of view, of more interest, is what we've got on the reverse, where we have this Londonia monogram. So we've got an L, an O in the middle, an N there going across the coin, a D on the end as well, an I tucked inside the D, and there's a little connection, the downstrokes of the L and the N, which gives you the A. And that gives you all the letters that you need to spell out Londonia and demonstrates that this coin was struck in London. And so it's from the first mints that Alfred the Great establishes in London in roughly the 880s that we get our founding date. And I say roughly, and the reason for that is that we can't really put a precise date on it. So more modern archaeological thought has pushed the date back of the Royal Mint's founding round about to 880 itself, which is taking it a little bit earlier. But it's from this point onwards, really, that we get a mint that an organization that we today know as the Royal Mint from the late 9th century onwards. And for many, many years, if you're looking at how coins are made, well, it's not a grand, elaborate way of doing it. It's done in a very much a small workshop-like fashion. And what we have on screen here is it's actually a German woodcut, but demonstrates the medieval minting process that would have been prevalent around Europe, as well as at the Royal Mint itself. So what we can see up here in the top corner, you've got a chap there with a set of scales, and he's weighing in the bullion as it comes into the Royal Mint. So your raw gold and silver. It will then, broadly speaking, pass down the stairs to the melter, the chap in front of the fire with a long shovel, and he's melting that gold and silver down, and it'll cast it out into long, thin strips in sand molds. The next broad part of the process is seen here. So you've got a chap straddling a wooden bench with an anvil there, and what he's doing, hammer in one hand, the anvil below him, is beating that strip of metal to reduce the thickness, to get it the correct thickness ready for blanking. And that is what we can see down here. This gentleman with the large set of shears, scissors, is cutting that strip of metal to get your individual circular blanks. And that is ready for the final part of the process, which we can see over here, which is the magic of actually striking. So that's putting an impression on that blank disc. And yet again, we can see a gentleman straddling a wooden bench, hammer in one hand, and then in his other hand, he's got the bit of kit he needs to produce the actual coins, which are the dies, the really important part. And we've got a close-up look at a set of medieval dies here. In fact, these are the earliest dies we've got in the Royal Mint Museum's collection. They're from the reign of Edward III. And you can see two, well, obverse and a reversed die. You've got the top half here, which is called the trussel, and then the lower half, which is called the pile. And you've got a spike on the pile, and that will be used to secure it into a lump of wood. And you can quite clearly see you've got designs engraved on either side. So you put your little blank on in between the two and then wallop with a hammer. Very, very basic, very, very simple. But that is how coins are made at the Royal Mint, right from the Anglo-Saxons all the way up until the restoration of the monarchy in the 1660s in this country. But that just leaves you the question of where this minting is taking place. Well, from 1279 onwards, we end up with a very prestigious venue because all the little individual Anglo-Saxon and early medieval mints that are dotted around the capital of London then become centralized in 1279 into one location, and they become centralized into the Tower of London itself. And we don't ever get into the grand parts of the tower. Instead, we're shoved right to the edges of the Tower of London. And we can see that from this plan, this later 18th century plan of where the Royal Mint was based. And we occupied the space between the inner and outer walls of the tower. So the iconic image of the Tower of London, which if you search Tower of London on Google, is the White Tower. And that is based right in the center of this plan. It's just not shown. And so we are right to the edges of that. And that's hardly surprising, really, when you think about what's going on with minting, because you saw the woodcut earlier, German woodcut, and think about all those processes taking place. So you've got melting, and the fumes being kicked off by melting. Then you've got the repeated blow of hammers on metal all day when production's taking place. Added to which, this is not some kind of logical factory arrangement. This is all done in a rather hiddledy-piddledy fashion, which means that you'd have people walking backwards and forwards in this very narrow walkway, big baskets of blanks or big baskets of finished coin or strips of metal across their shoulder. So in short, it would have been a very noisy, dirty, hectic, and smelly place to be around as and when production was taking place in the medieval period. But that doesn't mean you can't make remarkably beautiful coins. And you can see that from this particular image that we have on screen here. And what we have on screen here is an example of the first regular gold coinage struck in England. And that is produced in the 1340s during the reign of Edward III. Stunning gold coin. Like I said, first regularly produced coin, regularly produced gold coin. And at the time when it is issued, it has the value of 6 shillings and 8 pence, which is a mind-bending denomination for the modern ear to get their head round. But it does work because 6 shillings and 8 pence is a third of a pound. So 3 of these, believe it or not, would have given you £1, and 2 of them would have given you 1 mark, which is a unit of account used in the Middle Ages, 13 shillings and 4 pence. But a very, very elaborate coin and a very large sum of money. So this is going to be used by your merchants, your bankers, and your gentry. So average man or woman in the street is never going to see one of these, let alone handle them. But that explains why so much time and attention is gone into making this a really elaborate and ornate piece. It's designed to convey the wealth and the power of Edward III's England, because when producing this, it's full well known that they would go across onto the continent and be seen on the continent more generally, because merchants would use them as part of major international trade deals. So imagine an English merchant going off to Flanders or France or Castile or wherever, and he's trading for wine or wool or whatever it might be. If he's buying things in bulk, he'll be trading with his counterpart with a small purseful of English gold nobles in order to buy those goods. And that is why so much time and effort goes into making them really stand out to showcase that powerful message about wealth. And we don't really think about coins conveying political messages or messaging more generally. But for centuries, the gold coinage has done that and done that very well. So if we skip forward a few centuries in this country to the reign of Henry VII, what you see on screen there is actually the start of an iconic uh, range, I suppose, or run of gold coins for this country, which is the gold sovereign. And the gold sovereign we still make today, albeit in a very, very altered form. And I'll come on to that later. But it began in 1489 on the orders of Henry VII. And you get this really grand, elaborate, large gold coin, the first ever £1 coin struck in England, and the largest gold coin ever struck to that point to be produced. And you think, well, why does this come about then? Why in 1489? But if you start to put yourself in Henry's position, you get some understanding of why it comes about. So Henry VII had only relatively recently seized the throne from Richard at the Battle of Bosworth a few years earlier. So he'd won the throne through martial conquest. But there are many people nationally and internationally that question Henry's right to rule. And so he needs to prop up his power base. And one of the means of doing that is the gold coinage. And so he issues this grand, spectacular large gold coin on which you can see him enthroned in majesty, this ginormous throne. And he's got all the paraphernalia of royalty there. He's wearing the coronation robes. He's got the orb. He's got the scepter. He's crowned with this truly impressive crown. And it's all designed to convey to those who see it that he, Henry, is the rightful monarch, the rightful ruler, in fact, the rightful sovereign of England. And the name of this coin is no coincidence. It's that final bit of blunt instrument, really, to hammer home that he, Henry, is in charge. He, Henry, is the rightful ruler. So, in many ways, what you're seeing with the first sovereign is a really bit of clever politics. And we know that Henry uses these things very judiciously. So, you've got visitors coming across from the courts of Europe. And when they're about to go back to their respective courts, wherever they might be in Europe, what does Henry give them? Well, he gives them gifts of sovereigns, so that this message about him being the rightful monarch can therefore be disseminated much more widely via these ambassadors through the gold coins in which they take back to their country. So it's a really clever use of the coinage. Skipping forward a bit and staying with the message of production and how production changes. So you've got people hammering gold and silver coins out for many, many centuries, right? Say from the Anglo-Saxons all the way up into the 1660s. And in the 1660s, you get this bit of kit introduced into the Tower of London to mechanize the process. Don't get carried away thinking that it's going to be a real labor-saving device, because this is still a lot of hard work for the people involved in production. As you can see, it takes 5 people to crew it. So you've got 2 pulling this way on the rope, 2 this way on the rope. That raises the screw, and then you let go, the screw descends, and the coins are then struck down here between an obverse and a reverse die. And this is hard work for the 4 chaps doing the pulling. They would operate in shifts of around about 15 to 20 minutes. So intense was the labor involved. But reserve your sympathy for this young gentleman down here, because he very much is at the sharp end of the operation, because it's his job to put the coin on and then flick the finished coin off, all between bang, bang, bang. So he's really got a difficult job to do there. And these things can go at some speed. So we know that they can strike around about 30 coins a minute when they're going at full pelt, which doesn't give the young lad much chance to do his job and really does put his fingers in danger of being mangled and destroyed. But it has a massive benefit for a coinage point of view, because you go from this, which is a medieval coinage. So on screen, we've got a lovely stack of gold nobles there, but you can see they're very, very thin, very rough and very ragged and with poor relief, because there's a limit to how much pressure you can apply by walloping something with a hammer. When you start using a screw press, though, you instantly get a much more uniform, much more modern looking coin. And you can see on this piece here, this rather beautiful 5 guinea piece of Charles II, that it's got greater relief than the medieval examples I've shown you. It's much, much thicker. And with it being much thicker, because you're using a greater tonnage to strike it, you can actually get an edge, in many senses. So you see here, with the edge developing, you can start to put an edge inscription on there, or milling, which are both security features, and stop people clipping around the edges of the coin. Now, this is a 5 guinea piece, and the guinea is a new denomination during the reign of Charles II. It becomes the preeminent gold coin for the best part of 200 odd years in this country. But guinea is a slightly unusual name for a gold coin. And you'll notice on this piece as well, you've got this little elephant. Why on earth does an English gold coin have an elephant on it? Well, what the elephant is a provenance mark, denotes the source of the bullion that went into making up this particular gold coin. And in this case, the elephant is the mark of the Africa Company. And it is the Africa Company that import the gold that go into the very first guineas. And they import it from the Guinea coast of Africa, which is why the guinea picks up the name that it does. And you end up with this little elephant there, or an elephant castle, to demonstrate that link between Africa and England. Getting back to production and whizzing you through a little bit of how coins are made over the centuries, you get another advance during the Industrial Revolution when you get the pioneering use of steam power. We can see a steam-powered press on screen here. Now, this is not pioneered by the Royal Mint. This is done by that great entrepreneur, Matthew Boulton, and he establishes his own private mint up in Birmingham using this new technology that we can see on screen here. So contrast that, so this is the 1780s, contrast that with what's going on at the Royal Mint, where you've still got four blokes pulling on ropes. It's technological, light and dark. And the Mint desperately needs to modernize to keep up with technological demands. And as a result of that, we leave the Tower of London. So in 1810, we leave the Tower and move to a purpose-built site on Tower Hill. And that is what we can see on screen there. And that allows us to modernize. So we put in new steam-powered presses, and thoroughly modern factory is created at the start of the 19th century. You can see here as well, this is the rather grand office facade building. That's still there. So if any of you ever get a chance to go to the Tower of London, just look across the road, basically, and you'll be able to see this rather grand Georgian building still there. All the factory area that was behind it, which is where the coins were made, has long since gone. And you can see the chimney there of the Raw Mint refinery peeking out in the background, which had to be raised on several occasions because residents kept complaining the fumes of melting were gassing them out. So you had to make the chimney higher. But it's in these premises that you get the introduction of the modern sovereign. So I've talked a bit about the Tudor sovereign, and the Tudors had that sovereign throughout all of their reigns, all the way up until James I, actually, the first Stuart king. And then the sovereign disappears for the best part of 2 centuries. But it's reborn in 1817 in its modern form. So in the form that we still have it today. And that comes out of a whole series of coinage reforms that happen after the Battle of Waterloo. And this is what the public would have had to get used to in 1817. So you can see on screen here, you've got an obverse with George III there, and the reverse has got the iconic St. George and the dragon design. And both these designs are by a very talented engraver called Benedetto Pastrucci, very gifted, very talented, comes to the Royal Mint after the Battle of Waterloo and does some beautiful designs, of which he's best remembered for his St. George, but a very temperamental man, very difficult to deal with, and he falls out with a lot of people. He's a very flamboyant but awkward and difficult man to deal with. You can see why he probably won favour in some ways as well, because George III here, this image of George III that we've got on the coinage in 1817, you'd never guess that in reality, George III by this point is actually well into his 70s, bald and with a really long white beard. And instead, on his coinage, he actually looks like some kind of fit, virile Roman emperor-esque type in his 40s or 50s. So flattery obviously goes a long way when it comes to gaining favour for the coinage. But this sovereign, the gold sovereign, becomes the iconic coin of the 19th and 20th century. And it is the coin that really greases the wheels in all colonial and ultimately international commerce. It becomes, in essence, the American Express card of its day. So you get that saying with American Express cards, accepted wherever cards are accepted. The sovereign was accepted wherever coins were accepted. It goes all over the globe. And that explains why the Royal Mint has to start establishing branches around the world. And it's done primarily to feed the demand for the gold sovereign. By the 1880s, you've got 30, I think it's 38 different countries and dependencies around the globe that recognize this as legal tender. Countries like Portugal, for example, which have no official connection to Britain, recognize it as legal tender. And you get accounts of people trekking through the jungles of Brazil, carrying bags of sovereigns with them, full well knowing whichever random bit of the world they end up in Brazil, they will be able to use these gold coins. So trusted and accepted was the coinage, the gold coinage. But to feed that demand, that millions upon millions of pieces required to feed that demand, the mint starts establishing branches around the world. So you get the first branch of the Royal Mint opening in Sydney in 1855, close to a gold source. And the idea is you dig up the gold, refine it, and turn it directly into gold sovereigns, which can then be put into circulation. That's followed by two other branches, Melbourne and Perth. You get a short-lived wartime expediency striking for just 1 year in India, in Bombay, producing in 1918. You've got a branch opening in Ottawa in Canada, although it's never particularly successful. That opens in 1908. And then you can see how unsuccessful Canada is as a gold striking branch by the fact that India strikes more coins in 1 year than Ottawa does in the 20 odd years of its entire operation. It does make Canadian sovereigns a little bit more sought after these days from a collector point of view. And then you've got South Africa as well, which produces gold coinage after the First World War. And all of these are tasked with churning out sovereigns in their millions. And as a result of that global circulation throughout the 19th and early 20th century, and this is a circulating gold coin, it begins to embody more than just a denomination, more than just a coin. And you get that from this particular image, which at first is a bit random, I admit. But you can clearly see on there, you've got a 1904 gold sovereign, and it's embedded into something. And what it is embedded into is the end of Black Rod's staff. Now, Black Rod is one of those classic British titles that goes back donkey's years. And the actual official title is the Gentleman Usher. Well, I think these days it's the Usher of the House of Commons. The gentleman has been discarded, particularly as it's now a lady doing it. But the Usher of the House of Commons. And their role, one of their ceremonial roles, is to proceed in front of the King at the state opening of Parliament with this staff in hand and then bang on the doors of Parliament in order to gain admittance for the King. And at the end of that staff, which is doing the banging on the doors of Parliament, is this 1904 sovereign. And that speaks volumes about how the British public and particularly the British authorities saw this coin at the start of the 20th century. It was symptomatic of the pride and prestige of an empire and of a nation. But as I said, it's a circulating gold coinage. In effect, this is the nation's gold reserve in change, being frittered away daily by people wearing it away in their hands, dentists melting it down to go into fillings. It's a massive, massive luxury. And it's completely and utterly unaffordable during wartime. And one of the first casualties of the First World War, the Great War, is the circulating gold coinage. Because what happens in August 1914, as soon as war's declared in this country, you get the Chancellor of the Exchequer standing up in the House of Commons and saying that anybody who's using gold or hoarding gold is helping the enemy more effectively than if they were taking up arms to fight against Britain. And as a result of that, sovereigns are replaced with banknotes and they cease to be issued for circulation. And it's not until much later that the sovereign is revived in its modern form as the bullion coin that we know it today. But the First World War kills it off as a circulating gold coin in this country. So after the war, you start to see other things coming to the Royal Mint. So you start to see commemorative coins appearing for the first time, really, in 1935. And what we can see on screen here is the very first modern commemorative that the Royal Mint makes. And that's really a special design. When I say very first, it's the first time we do a special design to mark a specific occasion. And in 1935, it's done to mark the Silver Jubilee of George V. And you get the classic image of St. George slaying the dragon. You can see St. George there mounted and the dragon at the bottom. And it's done by a gentleman called Percy Metcalfe, very gifted, very talented designer. But he's got a distinct style, which you can really see on here, very Art Deco in some ways. And this design is very Marmite. People either love it or they hate it. Personally, I love it. It's one of my favorite designs. But the king, George V, hated it, didn't really like it, to be honest. And when the deputy master is showing the king this design initially, one of the things the king says is that St. George must be a damn bad rider because his legs are straight. He didn't particularly like the fact that he wasn't done in a naturalistic way. And Percy Metcalfe is also a bit mischievous on this design because the image that we see here, this portrait of St. George that we see here, is actually probably 99% likely to be a self-portrait of Percy Metcalfe himself. So he's actually built himself into the coinage design as St. George, which is a little bit mischievous, really. But that is the first modern commemorative coin, and it kicks off those decades of commemorative coins that we've made ever since, really. But we're no longer in London. And the reason that we are no longer in London is because of decimalisation. So decimalisation in this country happens in in the early 1970s, but it's announced in the 1960s, in 1966. And what you get with decimalisation is the sweeping away of that old system of pounds, shillings, and pence. You know, the weird system of 12 shillings, 12 pence to a shilling, and then 20 shillings to a pound, to replace it with a logical system of tens, the decimalisation of the currency. Now, one of the last nations on earth to actually do that, unsurprisingly. But decimalisation means that you've actually got to strike millions upon millions upon millions of new decimal coins. And Tower Hill, based in London, where the mint used to be, could have done that, but it would have had to cease all its overseas work for a good 4 or 5 years to do so. And bearing in mind, in 1966, the Royal Mint had just won the Queen's Award for Export. The last thing we wanted to do was give up all of that hard-won work in order to just focus on the UK coinage. And that explains why you end up with Llantrisant. They decide to establish a new, thoroughly modern mint somewhere else outside of London that will strike all of the decimal coins needed for decimalisation. Then once the decimal program is done in the early 70s, you'll gradually move all the work from London to this thoroughly new modern factory. That just gives you a question of where to put it. And they look at sites all over the United Kingdom, places like Belfast in Northern Ireland, Durham in the north of the country, the Scottish borders, South Wales, all over the United Kingdom. And they're usually in traditional industry areas that are in decline, which is primarily steel and coal in this country. But that leaves you the question of why on earth did we end up in South Wales? Well, there's two factors to that. And the reason largely revolves around when you move somewhere like the Royal Mint, it's a very niche employer with niche skills, and you have to move some of the workforce with it. Now, bear in mind the people in the 1960s who were working at the Royal Mint were either born and bred in London or had recently emigrated to London from the Caribbean. The last thing that they want to do is up sticks and move to some random part of the UK that they'd never been to before. So it wasn't a particularly popular decision with the workforce in London. And so when asked where they want to move to, they describe South Wales and Llantrisant, which was where we are now, and this is their words, not mine, as being the least obnoxious of all the sites under consideration as to which to move to. So that's one factor. And then the second factor is that the decision largely rested with the Chancellor of the Exchequer of the day. That happened to be a gentleman called James Callaghan, and James Callaghan happened to be a member of Parliament for the Cardiff area. So lo and behold, combine those two factors together and you end up with Llantrisant, which is on the doorstep of Cardiff. So you can see the factors that came together to give us this site which we can now see on screen. So we move there. It opens in December 1968. It's opened by the Queen, Prince Philip and Prince Charles, as he was then. And then from that point onwards, we start producing decimal coinage. And the last coin struck in London is in 1975, which is a gold sovereign, although rather perversely, it's dated 1974. That leads us on to, very briefly, the modern Royal Mint and some of the things we do today. I just thought I'd focus on a few things. The commemorative coin range is still going strong. We've marked some really significant anniversaries for the late Queen. This was her Platinum Jubilee, one of the last big things that we marked for Her late Majesty Queen Elizabeth II. And then the exciting part in many ways, and also the sad part, because it meant the death of the Queen, but the exciting part for everyone who worked at the Royal Mint at the time was the new reign, because it had been such a long time in this country since we'd had a new reign. And this is the first opportunity that anybody working at the Royal Mint had had in to go through a change of reign. And that involved coming up with a new portrait for Charles III, coming up with new reverse designs, and things are still going on. We've just recently announced the new Great Seal of the Realm, one of the really high profile, high prestige things the Royal Mint does, which is used to seal, literally seal certain laws and legislations and bits of royal prerogative issued by the king. But this was a real opportunity, and what we can see on screen here is Martin Jennings, the designer of the Charles III portrait, proudly holding his new portrait of Charles III there. And Martin did a fantastic job, an amazing image that he produced in plaster of Charles III. Really tricky brief for any artist, particularly with a monarch who's, older, because you've got to really capture a sense of the likeness of an individual, and also get a sense of their personality coming across as well. I think what you really get with Martin's portrait is a rather warm, human depiction of the king. So it's one of the really classic coinage heads that have been produced in the last century or so. So he did a great job. But that really segues to where we are today. It's been a whiz through of 1100 years of history, some highlights and where we've been. But I hope you've enjoyed it. And as I say, if you've got any questions, do feel free to add them to the chat, and we can always address them later. But I will now pass on.
Chris, that was fantastic. Very informative and entertaining. So thank you for presenting. Thank you for sharing with us. I did have a couple of questions submitted. So if it's all right, we'll go through those right now, just before moving on to the next segment. The Royal Mint's been operating for over 1100 years, as you mentioned. So what would you say was the most defining moment or transformation in its history?
Probably the most defining moment comes in the 1780s, 1790s. And it's a little bit of I'll try and keep this brief, but there was a real moment of crisis at that point for the Royal Mint, because what happened at that point was that it was still using, screw presses, the four blokes pulling on ropes that I mentioned in my talk. But then you've got Matthew Bolton with his own private mint using new modern technology up in Birmingham. And there was a real moment of crisis where it might have been the case that the government mothballed the Royal Mint and actually just went to the Royal Mint up in Birmingham. So that moment of change where it was decided to move location across and out of the Tower of London to this new mint and install new factory actually led to the mint moving forwards for the next 2 or 3 centuries to what we have today. So it was a real moment of crisis, that point, when you had this private mint, which was essentially outcompeting an old-fashioned, antiquated mint as it was at the time. And so that was, I think, one of the most defining mint points in its history, because it could have stopped. It could have stopped at that point.
Competition's always good for innovation, isn't it?
Exactly. Yeah.
Yeah. You did talk a lot about the monarchy. Um, Many people, maybe they don't realize um, uh, how tightly integrated the Royal Mint is to the British monarchy and its national identity. So, how has that relationship shapes the Mint's mission over the centuries?
So our primary goal today, even though circulating coin has declined, is still to strike the circulating coins of the United Kingdom. So we're not doing many of them, but that's our primary purpose, to fulfill the circulating coinage of the United Kingdom. And we are very closely associated with the monarchy and the treasury. So the monarch has to sign off on every coin design and every theme that we come up with. It ultimately goes through him to physically sign off. We will do a submission to the Treasury. The Treasury will then send that submission up to the Palace, whether that's for new UK coin themes or new UK coin designs. He physically signs them off, every one, at various Privy Council meetings. So it's still a very close-knit relationship. And for his new definitive designs, so these are the new coins of Charles III, the reverses, he was heavily involved. We asked him what he wanted, and out of a long list of things, one of the things he suggested was conservation, and that led us down the route of the animals that we see on UK definitive coins today.
Thank you. Finally, the historical artifacts and documents, how are they preserved? Is there a museum which is open to the public where people can come and visit?
So yes, there's a Royal Mint Museum. So we've got an exhibition space where we've got a small selection of what we have on display, but we are open to researchers as well. and who can come in and see everything pretty much. At the Royal Mint Museum, you've got the coins throughout the centuries, the many centuries. You've got tooling, you've got plaster models, you've got artwork. So there's a huge host of things that we keep at the Royal Mint Museum. We also have some documentation, but some of that earlier documentation is housed at the National Archives, which in the United Kingdom is in London at Kew, and people can freely go there to look at it. Those historic documents that go all the way back to the Middle Ages, right to the start of the Royal Mint's history, really.
Fantastic. We did just have a question pop up in the live chat as well. I understand there's a small Easter egg embedded in King Charles's profile. Could you describe what that is, please?
I mean, I presume they're referring to little bird in the ear that he probably is referring to there. Martin Jennings, when he designed that, he was blown away as everybody else to realize that it included a little bird in the king's ear. He just said it was pure fluke that the fold of his ear actually, when you look at it, actually turned out to look like a little bird whispering in the king's ear. I know Martin reasonably well, having dealt with him a bit, and it was just a complete fluke. It's just the folds of his ear makes it looks that way.
Oh, it's yeah, fun little bit
Sadly,
of
no messaging.
thank you.
Yeah.
Once again, Chris, we really appreciate that. It was very educational and entertaining. We're now going to shift gears and focus on what's happening in the markets today. So to help us navigate that landscape, I'm pleased to welcome Stuart O'Reilly, Market Insight Analyst at the Royal Mint. So Stuart plays a key role in analyzing economic trends, investor behavior, and what's moving the precious metals market. Today, he'll walk us through the latest developments, macro drivers, and how gold and silver are performing amid global uncertainty. So if you got some burning questions about inflation, central banks, interest rates, or where metals might be headed next, now is your chance to hear directly from someone who lives and breathes this every day. So Stuart, passing over to you.
As you heard from Chris there, the raw materials history is traced right back to a silver penny of Alfred the Great. And for most of our history, precious metals have been circulating in coinage in the UK. And obviously, they haven't done for a long time now. But the primary use of precious metals in the Royal Mint today is creating bullion coins and bars for investment purposes. And part of my role is to look both ways, really. One, out at the market and to customers, and kind of get their feedback and understand their requirements, understand what's going on in the markets. And the other kind of side of that is to feed that back into the business to make sure that the Royal Mint has the products and the services that help meet customer needs. So I'm going to talk a little bit about why precious metals are still relevant today, particularly relevant today, actually, as you'll see from some of these slides. So you can see here, gold has had a pretty impressive time recently. The graph in the top left there shows the gold price from the start of 2024 right up to date. Pretty impressive growth there. The green line is actually an exponential growth line, believe it or not. So it's showing the huge rise in gold. And last year, gold had 40 new record highs when priced in dollars, and it's had 11 so far already in 2025. If we look at a kind of global picture about ETF holdings, so that's gold held via the stock exchange by and large in all of the products around the world, the value of that gold is now at an all-time high. So there is $379 billion worth of gold held in ETFs or ETPs, because some of them are slightly different structures, but held in ETFs around the world. And the Royal Mint itself has seen 3 consecutive record quarters when it comes to sales of bullion coins, showing that there is still huge demand out there for investment in coins particularly. And the key drivers of that are the 4 things that I've got below there. So monetary policy is a huge topic and actually become probably slightly more relevant over the last couple of days with some of the developments that I'll touch on later about the US credit rating and the one big beautiful bill that is working its way through Congress. Geopolitics is certainly driving the gold price and did for much of 2024. And when I've got there 2024 elections, I don't just mean the election of Donald Trump. Actually, 2024 was the largest year for elections in global history. More people could go to the polls in 2024 around the world than in any other year in world history. And what that means is that in lots of major power blocks, be that the European Union, in the UK, we had an election, obviously, the US had an election, India had local elections. Those Lots of those are new administrations um, who are kind of enacting new policies and changing the dynamics of geopolitics globally, not least, of course, Donald Trump in America, who is realigning some of those traditional alliances, traditional trade routes, and the way that the world has operated for a very long time. And we've also got conflicts, of course, which drives demand for gold as a safe haven. So we've obviously got the conflict between Ukraine and Russia. There's the conflict in the Middle East. And there are others who are scared that conflict may be on their doorstep as well. South China Sea springs to mind, particularly there as an area where they are concerned about potential future conflicts. Inflation is also kind of sticking around. The central banks have done a reasonably good job, it's got to be said, of bringing inflation down by managing interest rates. But those inflation rates are still stickier than the central bankers would have hoped they would be. And particularly with a lot of the news recently coming out of the US, but also we've got our own pressures in the UK that is fueling inflation and fueling speculation that actually inflation might be here to stay for longer than we'd hoped it would be. And then the big one, obviously, is the tariffs that Donald Trump announced on Liberation Day. That obviously has a potential to spark a trade war. It will mean that traditional trade between countries may change. Some countries and some manufacturers may look to find new routes to market in new areas of the world. And that will have an effect on investors' portfolios. So you might be invested in a company that was selling huge amounts into the US, and it might switch its markets to Europe or into Asia and sell at a different price and have a different strategy, and that's going to impact obviously the share price of that company. And when you get those kind of trends, people look for safe haven assets, and gold is the one at the moment above all the other safe havens that seems to be shining. But it's not just the last couple of years. Here's the last 5 years. The gold price there's had a pretty impressive 5 years. You can see from the price chart there, reaching over $3,400 earlier this year. And I remember late last year, I was asked by a very well read journalist in London. He said, "Do you think that gold is ever going to reach $3,000?" And he asked it kind of almost mockingly, because there's always those forecasts out there that kind of forecast that the gold price is going to suddenly rocket and go through the roof and it's going to hit $10,000 and all those kind of clickbait headlines, if you like. But he was asking the question because he thought that gold at $3,000 was not really conceivable. But here we are. We're currently around $3,300, so $3,300, and you can see the shape of the graph there, how quickly that's risen. And it's not just the last 5 years. Here's the last 30 years, an incredible performance over the last 30 years. And you can see just how steep that rise has been in the last couple of years. So that's post-COVID. So it's not the 2020. There's a spike there, as you can see on the graph. But this is very much in a post-COVID environment. So it's not necessarily driven by some of the dynamics created by the pandemic. And gold's returns are really impressive. So people often say, well, why would I buy gold? It doesn't pay any dividends. It doesn't have a yield. But the returns for gold are actually pretty impressive. This year to date, gold has grown 28%. The average over the last 5 years is 11% a year. And over 20 years, it's averaging 9% growth per year. And obviously, there's some good years, some bad years, but 9% compound annual growth rate is pretty impressive for any asset class. And we can see here some of the other things that North American investors might be investing in. So these are the returns compared, and it's looking at total return indexes. So this is factoring in the dividends, factoring in the yields you get from equities markets. And you can see there gold at 28.1%, silver is pretty high up there at 14.5%. If we factored platinum in, actually, platinum is at about 18% growth this year. So fits nicely there between gold and silver. And if you look at some of the more traditional asset classes, so you can see there the S&P 500 down almost a percentage point. US equities similarly, commodities have grown, but 5.8, and of that, crude oil you can see at the end there is down 10%, which is also a bit of a safe haven asset at times. So in this market environment, precious metals are doing exceptionally well. And this is a story we've seen repeated time and time again historically. So this graph here looks at events of the past 25, 30 years. So starting there with the long-term capital management and when that collapsed back in the late 90s, I want to say 90s probably. Then you got the dot-com bubble, 9/11, there were some recessions, sovereign debt crises, that type of thing. And you can see how gold behaves in comparison to global stocks and US Treasuries, for example. The most obvious one there, perhaps, is that Great Recession bar chart there, which is 2007, 2009. You can see that stocks fell by 49% in terms of the global stock market, and gold was up 47%. And in most of those environments where you had a sudden shock that the world wasn't necessarily expecting, so Brexit, the sovereign debt crisis, COVID, you can see when equities fall, gold has tended to rise. It's not always the case, and it doesn't always balance off perfectly. But what this means is that gold provides that diversification for a portfolio that helps shield that portfolio from risk. So rather than having everything in equities and relying on the performance of the equities market, or having everything in any other asset class and relying on the performance of that, this helps balance out a portfolio to make sure that your portfolio isn't dropping by as much when there are those big global shocks. But underneath all of that, there is a broader term trend, and it's been called de-dollarization. Now, when you ask about de-dollarization, the central banks, who are the ones that are accused of de-dollarizing, if you like, all say, well, no, we're not de-dollarizing. It's not us. Other people might be de-dollarizing, but we're not de-dollarizing. But the data seems to point to something different. So central banks will hold gold as part of their reserves, and most central banks will hold predominantly actually US dollars, US Treasury bills, as part of their reserves. And gold traditionally has been a relatively small part for most of the world compared to dollars. And they'll hold other things too. They'll hold euros, they'll hold pound sterling, they'll hold Swiss francs and Japanese yen. But what's been happening over the last couple of years, particularly, is that central banks are decreasing the percentage of their currency reserves that they are dedicated to dollars and moving into other asset classes. Now, traditionally, we would have thought, well, maybe euros, maybe pound sterling. But what we're finding is actually where we're seeing growth is some of those non-traditional assets for central banks reserves. So Canadian dollars, for example, are increasing as a percentage of central bank reserves. Chinese currency is increasing. South Korean won is gaining a greater proportion of central bank reserves. But the most significant trend is in gold buying. And you can see from the two maps on the left-hand side there, the way that the market has shifted in this. So the top map there shows the period between 2002 and 2004. The countries in red are countries that sold gold. So they were net sellers of gold from their central banks. And you can see population-wise, but also in terms of land mass, I guess, is the most obvious one, that lots of countries were selling gold, and that 40 countries sold gold, and they sold in total, globally, a net of almost 1,800 tons of gold. Fast forward 20 years, because central banks do take a very long time to change policy position. And actually, the situation has flipped. Far more countries are now buying gold than are selling, and the net amount of gold buying is is astronomical levels. For the past 3 years, central bank gold buying has been over 1,000 tons. In the past 10 years, it's never really exceeded 700 tons. And there's not really many signs that this is going to change anytime soon. When the World Gold Council asked central banks why they're buying gold and what they expect for the rest of the market, 81% of them thought that central bank gold holdings would increase over the next 12 months. And 69% thought that gold would increase as a proportion of global central bank reserves over the next 5 years. And when they're asked about why they're buying gold, as I said, they're saying they're not de-dollarizing officially. They're not saying they're de-dollarizing. They're saying, actually, we're just buying gold because it's a long-term store of value and it's a good inflation hedge, or it performs really well during times of crisis. But that broader trend underneath still persists, where the dollar is losing its share of global central bank reserves and gold is increasing its share of global central bank reserves. And it's not just confined to one particular group of countries. Last year, Poland was the largest gold buyer in terms of central banks. And if you think of the reasons Poland might buy gold, well, it's a country not too far from Russia. It's a country that doesn't use the euro. It has its own currency. And when Russia invaded Ukraine, the Polish zloty, the Polish currency, really struggled for a while. It was hit by the shock of that. And other countries who are in a similar position are doing the same, also buying gold. So Hungary, Serbia, Georgia, the Czech Republic, all in Russia's neighborhood buying gold. But they're not the only ones. So you might think that might be related to what's going on in Russia and Ukraine. But China, India, Russia also bought gold, huge economies, particularly China and India. Some of the traditionally non-aligned states are buying gold, places like Oman, Qatar, Ghana, and they're perhaps buying gold because of the fear of sanctions. Not that they believe sanctions will happen to them, but they've seen obviously Russia be cut off from the SWIFT system, be cut off from access to US dollars, really. And gold is a kind of neutral asset that just protects you from sanctions and enables you to trade with whoever you want with. It kind of is the politically neutral asset, which fits those traditionally non-aligned states. And then you've got countries like Taiwan also buying in the South China Sea. Presumably there, some of that is to do with the dominance of China in the region and concerns about what might happen next in that area. And some of this has also become particularly salient in the past few weeks. You might have seen the news about Moody's, the credit rating agency, have downgraded the US government's credit rating. So historically, the US government has had a AAA credit rating, the kind of best credit rating that Moody's could possibly give. And some of the other credit rating agencies, so S&P and Fitch, have previously downgraded the US's credit rating, but Moody's took that step last month or earlier this month. And they cited concerns about the size of the US debt and the willingness of Congress to tackle it. So US debt is now $36 trillion. It's approaching 100% of GDP. And then after Moody's downgraded the credit rating, through Congress is passed, or through the House of Representatives and not yet the Senate, is the one big beautiful bill, which Congress's own kind of budget forecasting office expect to add another 2 trillion to US debt. There are other estimates out there depending on how many of these measures are made permanent, but it could be substantially more. And what's happened in the bond market, so people loaning money to the government, buying US treasuries, is that the yields on 30-year US treasuries rose to over 5%. So the government is paying 5% to borrow money because the downgrading of the credit rating and the concern that Moody's have about the ability of the US to rein in its debt and deficit issues means that lending to the US government became less attractive, and therefore the yield has to go up in order to attract buyers. And if you think about, you know, safe havens, the US dollar, US treasuries have always been probably the most obvious safe haven asset. So if you're concerned about what's happening in the equities markets or you're concerned about property, um, US dollars were the kind of go-to asset for a lot of investors who kind of wanted to take risk away from their portfolio while other things went on, volatility sorted itself out, um, while they kind of repositioned. But those things have potentially made the US dollar less interesting to some of those safe haven people who are seeking safe havens. So if you were to look at other traditional safe haven assets, you've got things like the Japanese yen, but the Japanese economy itself is going through some changes. The Japanese prime minister stood up in parliament and said that Japan's fiscal situation is worse than Greece's in the Greek sovereign debt crisis. Now, he may have been exaggerating because he was trying to make a point about not wanting to deliver a program of tax cuts, but that is having an impact on the Japanese economy and the value of the Japanese yen and Japanese bonds. And Japan is one of the largest holders, or is the largest holder outside of North America of US government debt. And as Japanese interest rates increase, if they increase, which the market is now expecting that to happen, some of that money may well flow back into Japanese savings accounts where they may start to get a decent rate of interest and away from the US dollar. And similar things are happening in lots of other countries. Swiss francs, for example, Switzerland is a classic kind of safe haven country and a classic safe haven currency. But the Swiss National Bank have expressed some concerns about the strength of the Swiss franc, which obviously causes problems in terms of exports. And they may have to make some decisions there in terms of interest rate policy, which may impact the attractiveness of Swiss francs as a safe haven asset. And at the same time, you've got lots of media speculation about whether certain members of the cabinet in the US or certain members of the kind of broader Trump circle are pursuing an active policy of a weaker dollar in order to boost exports. So all of that combined together is leading to a situation where nobody's officially de-dollarizing, but dollars are becoming a smaller part of global reserves. And because central banks are buying for the same reasons that retail investors are buying, or so they say, long-term store of value, performance during a crisis, portfolio diversifier, actually we're seeing that retail buyers seem to be doing the same thing. They're buying gold because of the impressive performance of gold, and they don't know where else to put their money that's going to deliver those returns and that kind of safe haven status for them. And even kind of beyond that, if you look at gold demand more broadly, this is a pie chart of gold demand last year. And you can see it's roughly split in half. So if we ignore technology, so gold is used for all sorts of things like lining space helmets. It's in printed circuit boards in everybody's phones and laptops, but still a relatively small amount of gold demand. You can see it's split quite neatly between jewelry and investment. And if you think about why people buy jewelry, they tend to buy when they're feeling economically confident. They're feeling, I've got a stable job, my salary's going up, I can afford to go and buy some gold jewelry. And if you think about why people buy investment gold, it's often for opposite reasons. Actually, I'm slightly concerned about the economy, or I'm slightly concerned about the value of the stock market, or personal circumstances, and therefore I'm buying that investment as a bit of a safe haven. So it doesn't perfectly balance off, but it provides a bit of stability. And there's also dynamics there between East and West. So Eastern markets in East Asia tend to buy a lot more when the price dips. They tend to see they're very kind of sensitive to gold price. So they'll tend to see gold if the gold price is got some momentum behind it. They might stay out of the market and wait for it to dip. Actually, what we've seen recently is the opposite. So some of those price sensitive Asian markets have certainly seen demand increasing, and Western markets tend to buy when the price is going up, when the economy doesn't look quite so great. So there's a balance there to be had between the way that those two different parts of the world buy gold as well. And then if we turn to silver, silver's also in a very interesting position. There's something called the gold to silver ratio. And what this does essentially is to say how many ounces of silver would 1 ounce of gold buy? What's the value of gold when it's priced in silver terms, or silver when it's priced in gold terms? And you can see from the graph on the top there, the average since 2000 has been 68. So 1 ounce of gold is worth 68 ounces of silver. Where we are right now is that 1 ounce of gold is worth 99 ounces of silver. So if you took currencies out of the equation and just measured silver in gold terms, gold in silver terms, then historically silver looks um, pretty undervalued in relation to gold. Now, it's not to say that it is undervalued, and there's lots of other kind of factors that you need to think about if you're thinking of investing in silver, but it's an interesting way to look at it nonetheless. And you can see from the bottom graph there that silver has certainly been on a bit of a bull run recently, had some impressive growth, so year-to-date growth of 14.5% this year. And a lot of that demand is coming from green technologies. So I know certain parts of the world are kind of questioning the kind of green energy transition. It's certainly not really been the case in Europe. And silver is used very heavily in things like solar farms. And actually, even in the US, where there is a bit of a rowing back on some of those net zero commitments, places like Texas are building huge solar farms, which consume a huge amount of silver in order to capture that solar energy. And you've also got people like Samsung who are developing electric battery vehicles that contain huge amounts of silver to swap out gold because of its connectivity and the price point. They've developed a battery that contains roughly a kilo of silver. Now, it remains to be seen whether that's just a kind of concept piece or whether that's something they're going to roll out more broadly. But if we start to see more and more silver used in electric vehicles, then that could have an impact on silver demand and therefore the price. And it's a similar picture with platinum. You can see the similar ratio there for platinum. So how many ounces of platinum would 1 ounce of gold buy? And you can see it's really rocketed in the last kind of 12 months, and particularly actually the last couple of weeks. And again, if you were to value things in gold terms, platinum looks relatively undervalued versus gold on a historical level. So for the first time last month, 1 ounce of gold would buy you 3.5 ounces of platinum. And it wasn't too long ago that actually platinum was more expensive than gold. And platinum demand is largely a factor of automotive demand, of car demand. So platinum is used very heavily in catalytic converters, particularly on diesel engines, also on petrol engines, and not so much then on electric vehicles. So if we start to see a rowing back of some of those commitments to electric vehicles, where in Europe, for example, there are mandates about how many electric vehicles you have to sell a percentage. If we start to see some of that being rowed back, then we might expect a boost in demand from the automotive sector for platinum. And it's also used on the flip side of the equation. You know, if you think that we're going to head towards net zero, and actually maybe the electric car infrastructure isn't quite what it needs to be, and we need to explore other technologies, well, hydrogen vehicles consume a lot of platinum in the production of that hydrogen. So there could be an upside for platinum there. But there's also quite a deep forecast for a deficit in terms of supply and demand. And all this information you can find on the World Platinum Investment Council's website. They provide some great information in terms of the platinum market. But what's happening is a number of things at once. So a lot of platinum mines are restructuring, kind of thinking how to do their business. Some of the platinum ores that they're mining are degrading, and they have to look for other projects which aren't going to come online as quickly as they might have previously hoped. And therefore, the supply of platinum is forecast to decrease. And there's also heavy concentration of platinum geographically. So a lot of platinum is in Russia. Russia is broadly cut off from Western supply chains in terms of platinum. So the West is then relying on places like South Africa, which has a huge amount of platinum deposits. But there's problems in South Africa in terms of actually getting the platinum out of the ground. And it's twofold. It's to do with energy. So the national grid system, the energy system in South Africa, has had some really severe problems in terms of being able to meet demand. And when you get situations where demand is due to outstrip supply of energy, who do they switch off? They switch off the large energy consumers. And some of those are the platinum mines, who then just can't operate until the power gets switched back onto them. But they've also had lots of trouble recently with labour disputes between the mining companies and the actual miners themselves about pay and conditions, which has caused strikes, which obviously then also means that mine doesn't produce anything until that strike is resolved. And as a result, as I said, there is a forecast now for the next couple of years at least of a quite a deep deficit in terms of platinum supply versus what the market expects it will need in terms of car production, particularly. So those things could potentially provide a bit of a boost for the platinum price. I'm conscious of the time because I could talk about precious metals markets for hours, but I don't want to keep you that long. So I'll hand back over to Dave now.
Stuart, thanks for that. It's always insightful to hear about some real-time analytics into the market. We did have a few questions that were submitted in advance that you actually answered in your presentation. People were asking about de-dollarization, central bank buying. So you did cover, a lot of the topics that people were curious about. So thanks for that. We did have a couple of chats come up, or a couple of questions in the live chat. So I'll start with one from David. Good afternoon, Stuart. Regardless of fiat currency, is there a gold reserve to national debt ratio to which central banks aim as one way to maintain international confidence in one's national currency?
So I'm not aware. I don't think there's any particular widely accepted targets. All of the central banks will have their own targets and their own policies, and they're not always particularly transparent about what the overall policy is. And some countries will tell you, and Poland, I think, is one, Hungary is another, where they're headed in terms of their gold reserves. But obviously, if a country says, well, we're going to buy loads of gold or we're going to sell loads of gold, well, that moves the market. So actually, then it might not be a good time to buy or sell. So I don't think there's a particular ratio that countries are looking for, but there is certainly a longer term trend of central bank gold buying. And it is, as I said earlier, pretty widespread among different nations.
So we're looking at, I think it was 1,200 tons net of net buying last year. Where does that gold come from? Obviously, we have some countries that are selling, but where does the rest of it come from to make up the difference?
Yeah, so a lot of that will come, obviously, gold mining output. They source it all largely in similar places. So most of the international market works on what's called London Good Delivery Standards, which are the large 400-ounce gold bars, one over $1 million, 1.2 million, something like that, I'm supposing at this price. So that's what they'll buy and hold because they're the most liquid. If you've got huge amounts to invest in gold, that's the one you can buy and sell most easily with the kind of least amount of friction because that's how the international market works. Some of them have specific programs. I'm thinking some of the West African countries where they will buy the local mine output, both because it helps support the local economy, but also because it helps build the gold reserves without having to resort to the international market where you have to buy it from London or New York and then transport it and all the rest of it. But it comes from as wide a variety of places as every other kind of piece of gold. Some of it's recycled from old bars and coins or e-waste, or some of it is just been kind of knocking around the system for decades.
Thank you. Switching to recycling, we actually have a question from Keith here. Can you comment on the fraction of silver used in industrial applications which will be recovered at end of life through recycling? So, for example, Samsung batteries versus the fraction or the amount of silver which is gone forever when used in industrial applications?
Yeah, so this fluctuates largely with the price of silver. So, if somebody was going to pay you $2 for an ounce of silver, well, it's probably not worth my time to do. If they're going to pay you $200 for an ounce of silver, I'm definitely going to sell it. And it's the same with all the precious metals, really. The recycling rate tends to peak when the price peaks because people want to kind of make the most out of it. Um, Obviously, unlike gold, so gold is particularly useful in some technologies because it's really conductive, but also it doesn't corrode. Silver can tarnish, it can oxidize, so it's a little bit more difficult to kind of work with. And because of the price point, it sometimes means that it's not necessarily worth recycling as much as gold is. But I said it does vary quite drastically year to year.
Yeah, and as far as I understand it, some things simply can't be recovered. Missile guidance systems and rockets and things like that, which are single use only sort of items. Another question for you, probably the last one before we move on. If you were going to be speaking to a first-time investor in gold and silver, what's the one data point or trend you tell them to pay attention to right now?
Hmm, that's a great question. Um, I think it probably would be central bank buying because that is a very long-term trend. I said earlier, central banks take a very long time to change positions on whether they are accumulating gold or selling gold. Hence why the two timeframes I picked in the slide there were 20 years apart because you need that time to understand the change to see the market flip. Um, and when central banks are buying, historically they've been buying for a long time, and when they've been selling for a long time. Um, so we've had pretty record, well, we have had record demand for the past 3 years now. Um, and there is no sign of that abating. I would look at also the value of the US dollar, and probably, as I said earlier, the debt to GDP ratio in the US, the attractiveness of US government bonds, because that leads people to look for other safe haven assets, which is partly why central banks buy, but also partly why a retail investor might be interested. And obviously, with that increased demand, and you can imagine central banks buy huge amounts, that has an impact on the price. Um, and then if you see that increased demand for central bank buying and safe haven assets, then you will see demand go up and therefore the price.
I always say if central banks know what they're doing, and if they're putting their money into gold, then they're not doing it by mistake.
Yeah, very wise. Yeah.
Now, to close out today's presenters, I'm delighted to introduce Louise Edwards, Business Development Executive at the Royal Mint. Louise will be sharing some exciting updates, including new product launches and something we're particularly excited about, which is the reveal of the brand new secure Britannia Bars. So these bars represent the latest innovation in precious metals from the Royal Mint, combining trusted craftsmanship with enhanced security features and iconic design. Louise?
Thank you very much, Dave. So today I will be taking you through some of the launches that we have had this year, and also this will be some of the products that we've got coming up as well. So let me just begin. So the Royal Mint, home of precious metals, we're trusted by thousands of investors all over the world. The Royal Mint offers gold, silver, and platinum bullion approved by His Majesty the King. All of the Royal Mint's bullion, coins, and bars are tested to the most rigorous standards by an independent quality assurance process and their weight. As United Kingdom, legal tender is guaranteed by Act of Parliament. So I'm just going to take you through our roadmap. And as you could probably see, there will be a few that you recognise, but we do have a few brand new products coming out this year. So just going to take you to the product roadmap. And like I said, as you can see, you can probably see a few that you recognise there, but we also have some brand new product coming out later this year. Such as the British Lion, that is a new one for this year. And we have some exciting news to share with you in regards with our Britannia Bar, the Britannia Bar, and also the Sovereign as well later on in the year. So just moving on. So our flagship bullion ranges. So, according to research conducted by the World Gold Council, trust is one of the major concerns for gold investment considerers. The sample drawn from all significant gold markets around the world revealed that 48% of people reported a lack of trust as a barrier to purchasing gold as an investment, with 28% worried about buying fake gold and 21% concerned about the purity of gold. And it's no secret that here at the Royal Mint, we pride ourselves on both quality and security. And bearing this in mind, this year, our Britannia Gold bullion bar range marks a new chapter. It will be enhanced with 3 security features, making it easy for you to authenticate and liquidate your bullion bars. These unrivaled visual features significantly reduce the risk of counterfeiting and ensure that each gold bar in our Britannia range is more secure than ever, making this one of the most visually secure bars on the market. Just moving on to the key features on the bar itself. So, like I said, we are taking 3 of the security features from the coins and implementing that on the bar itself. So we will be adding the microtext, which add both decoration and protection, and that is there on the edge of the shield. We got the surface animation as the same as the coin, so that obviously creates movement in the background of waves, and then the latent image as well, which changes from padlock to Britannia's famous trident. And then taking it to the bar packaging. So we will be adding the UV watermark, which is here on the viewing window. And when you shine it under a UV light, that will show the Royal Mint logo. And we'll be obviously placing this in a tamper evidence certiline packaging. And the serial number, which you can see here, that will be implemented on the bar itself, and obviously together it will form part of the certificate. And the QR code here, which you might see these in some competitor bars, they can provide some, they will provide instant product authentication as well. And in regards to the bars, these will be coming in 1 gram, 5 gram, 10 gram, 20 gram, 50 gram, 100 gram, and 1 ounce bars. And with the uptake in demand that we've had for these bars, these are going to be a very, very big launch, which is actually happening on Monday. So we're very, very excited for that. Yeah, we anticipate these bars hopefully being given time, the market leaders, in comparison with our competitor bars that are currently on the market. Just moving on. So in terms of our Britannia coins, designed by the team behind the United Kingdom's 12-sided £1 coin, known as the world's most secure coin, the Britannia. 2025 bullion coin features 4 innovative security features that make it one of the most visually secure coins in the world. And obviously, as I've just mentioned in regards to the bars, the four security features on the bars is the surface animation with the movement of the waves, the tincture lines, which are very, very fine lines within the shield. We've got the microtext around the edging of the Britannia coin. And then we've also got the same latent image that we include on the bars as well. And in regards to the bars, obviously previously when we did the bars, I think we've actually launched them 3 years ago. With the bars being part of the Britannia range, and the Britannia being the most visually secure coin in the world, obviously it was a no-brainer for us to implement the same security features within the bar as well. So in terms of what's available with regards to the Britannia, we've got obviously they come in gold, silver, and platinum. The gold is quite standard: 1 ounce, half ounce, quarter ounce, and 1/10 ounce. But we have added some SKUs to the silver that we have to offer, which recently we have added the kilo, the quarter ounce, and the 1/10 ounce, which are the smaller denominations in the silver are very, very popular. And then we have also added the 1/10 ounce platinum, and the obviously we've got the 1 ounce platinum as well. And the 1/10 ounce platinum, I believe, is a exclusive product to one of our US customers as well. But yes, obviously our Britannia coins, they are our core product, and obviously these are one of our biggest drivers for the Royal Mint. But yeah, we can move on to the Sovereign. So we've got some exciting news for the Sovereign. We have some changes coming in. So the 2025 coin that we have, that we released last November, that is going to be the last of the rose gold Sovereign, as we have got to know, and it's been quite normal for the Royal Mint, for quite for a number of years. And we will be reintroducing how the Sovereign used to be. So that will come in the form of the yellow gold, and that will be coming in November this year. Obviously, the Sovereign is known as the chief coin of the world. It was introduced by Henry VIII in 1489, and has been associated with the monarch ever since. And since 1817, Benedetto Pestrucci's iconic St. George and the Dragon has traditionally appeared on the reverse of the Sovereign, apart from on a few select occasions. So we have seen, especially in the most recent times, we've seen the coat of arms be implemented onto the Sovereign for the Platinum Jubilee, and also the Memorial Sovereign when Her Majesty the Queen passed away. And Sovereign is struck in 22 carat gold, and is guaranteed to 5 decimal places. It is one of the most strictly specified coins in the world. We do have some other features that we'll be adding to the coin, but at the moment that is top secret, so I'm not going to be able to divulge that information just yet, but all will be revealed, and all I can say is watch this space. So just moving on to some of our other launches that we've had this year. We have recently launched the Queen's Beast Completer Bar. Now, if you are familiar with our Queen's Beast launch, obviously that was first launched in March 2016, and that was a 10 coin series, including the completer coin. And it was very, very popular. And basically the Queen's Beasts are the 10 legendary creatures who symbolize the history and ancestry of Queen Elizabeth II. And these are 10 statues are stood guard outside Westminster Abbey in 1953 as a will watch her coronation. This bar was new for us, as obviously you can see, it's a little bit different to our rectangular bars that we've previously done, and this is the first bar that we have done that is square. And obviously it is we launch it in the completer coin, and when we launched these, they actually sold out before we actually launched. So each piece that we had, because obviously it was limited edition, each piece had been allocated prior to the launch taking place. So it was a very, very highly successful launch for us. And these were available in 1 ounce gold, 1 ounce silver, and 10 ounce silver. And then moving on to the Royal Arms. So the Royal Mint is proud to celebrate one of the United Kingdom's most recognisable and majestic symbols, the Royal Arms, the coat of arms. And once seen on medieval battlefields making banners and shields, this enduring emblem has signified royalty and strength for centuries. In 2019, an interpretation of the arms by heraldic artist Timothy Node featured on a new bullion range, and the reverse design returns to coinage for 2025. So as you can see, obviously it features the lion and the unicorn. They take center stage on the coin, but obviously there is, it does represent for Scotland, Ireland, and England. As you probably noticed, there isn't anything on there that shows Wales at all, which, being Welsh, that is quite disappointing. But there is a reason for that. And when the emblem was created in 1606, Wales was actually incorporated into the Kingdom of England. So that is the reason why the anything Welsh actually isn't included in the emblem. Hopefully, in a few years' time, and they move with the times, that might change, but I can't see that happening, to be perfectly honest with you. But the Royal Arms, yeah, they're available in 1 ounce gold, 1 ounce silver, and 10 ounce silver. And then we've got St. George and the Dragon. So I'm not sure if any of you can remember the Valiant. This was known as what we used to advise our customers, was that it was the Silver Sovereign. So obviously we don't do a Silver Sovereign, but that would have been the closest thing to it that we had done. And the Valiant was available just in silver, and we discontinued that, I believe, in 2021. However, we have picked that back up, and we've revamped it as St. George and the Dragon. Now, this is the second in the series, and the design will be changing year on year. And as you can see, it is available in gold, and 1/4 ounce gold and 1 ounce silver. And Edward III chose St. George as a patron saint for England because of his dedication to the Christian faith and association with bravery. But yes, each year that design will change, which will be, obviously, it will be a lot different than to what is interpreted on the sovereign itself. And then moving on to the Royal Tudor beast. So obviously I touched upon the Queen's beast at the beginning of my presentation. And so far 6 designs have been released. So we've had the Lion of England, the Yale of Beaufort, Bull of Clarence, Seymour Unicorn, Tudor Dragon, and the most recent the Queen's Panther, and the most recent, the Greyhound of Richmond, which was a very recent launch for us. So these are representing Henry VIII and Jane Seymour. And obviously, whereas the Queen's Beast lined Westminster Abbey, these actually line the approach to Hampton Court Palace. And these are outside of our core product. I would probably say that these are probably one of our most popular semi-numismatic coins, and they continue to be, the demand for these continue to be quite high. They are available in numerous SKUs, such as 1 ounce gold, 1/4 ounce gold, 2 ounce silver, and 10 ounce silver, and also in the 1 ounce platinum as well. And then the British Lion coin. So this is a brand new coin for us this year, and it is a striking tribute to the rich heritage of Britain's past, drawing inspiration from the heraldic portrayal of lions as symbols and strength and dominance. This coin reimagines the iconic lion and long-standing emblem of British pride. The intricate design blends classical art with modern craftsmanship, capturing the lion's regal power and its historical significance as a protector of Britain. And the launch for these will be the 30th of June. So we've got a month until these are launched, and this again is due to be a very successful launch for the Royal Mint, and they will be available in 1 ounce gold, quarter-ounce gold, 1 ounce silver, and we will be introducing a 5 ounce silver in this particular coin also. And then that would be me done, Dave. So thank you so much for listening, and hopefully going forward, we'll have some exciting news to share with you in regards to the sovereign. But any questions in regards to anything that I've spoke with today, please feel free to pop some questions into the chat for Dave.
So the new sovereign coins, or I guess it's the original sovereign coins being continued, are they going to maintain the same gold weight as its predecessors?
Yes, they will. Yes,
I believe it's
it'd be
0.2354.
the same. It's just the color changing, and obviously there's just a few things that we will be implementing within the coin as well. But yes, it will be the same, the weight. Yes.
Okay. You mentioned that the square bars, the Queen's Beast bars, sold out before they were launched. With other products, let's say the Britannia bars, can international clients like those with SWP expect consistent access to them once they're launched?
So to be completely open and transparent, yes. But obviously this is a new launch. So we would probably expect to see a little bit of inconsistency with product on shelf in the first 3 months, I would say. But obviously, once we start building a bit of a footprint within, on shelf, then going forward after that, there should be no problem at all. But that's what we are expecting. We are hoping to have at least 6 weeks to 2 months of a footprint of product on shelf at any one time.
Fantastic. Are there any plans to maybe expand the size of the bars? Let's say to like a 10-ounce Britannia bar?
If there was any demand for that, then certainly, we're more than willing to take anything on board. If we feel that there is enough demand for something, then yes, we could possibly. At the moment, obviously, there's nothing in the pipeline for a bar of that size. Obviously, we do the silver, but not in gold. But yeah, like I said, if there's enough demand for something that we can put it towards the business, then absolutely we can certainly take a look at that.
Yeah, I found personally that North American buyers will look more towards ounce denominated products, 1 ounce, 10-ounce gold bars, when buyers from the UK and Europe will go towards 50-gram, 100-gram gold bars if they're looking to increase in size. So I can understand why you've chose those denominations.
Yeah, no, completely understanding. Yeah, like I said, Dave, if we had any reason to add a 10-ounce gold, for instance, if you had enough demand for that, then yeah, put it our way and we can certainly take a look at that.
Great.
We listen.
Now, I did have a couple of questions submitted before, and I'm not sure if you're the right person to answer or if anyone else on the panel can answer these questions. But it was UK buyers concerned about VAT on buying silver, value added taxes.
So in regards to silver, obviously that would be for UK customers. I believe internationally that VAT would, obviously we wouldn't charge that, but it would really depend on the country of origin and what they would charge. So we wouldn't charge that if international person purchased from us. But yeah, it would really depend on the country of origin.
Okay, but for products made by the Royal Mint itself sold to UK clients,
then yes, it would be 20%.
I know certain products are exempt from capital gains tax. sovereigns and Britannias. Do you have a list of what products? Is it all?
It would be all of our coins. So all of our bullion coins are legal tender, and that's what makes them capital gains tax exempt. So all of our coins that we sell to our partners are legal tender, therefore they would be capital gains tax exempt. So
Okay.
it would just be all of our coins.
And does that, like the specialty coins as well, or limited release, are they all considered legal tender?
Yes, they would be, yes.
Okay. I did have a question in the chat from Carl, looking for some clarification about the sovereign coins. Just essentially that they are 22 karat gold versus 24. And the 5 nines description, normally when describing gold, it'll say, 4 9s or 5 9s with pure gold. So it's just they're just a little confused about the actual makeup of the sovereign coins.
Right, okay. So it would be obviously with 24 carat, yeah, it is 999.9. With sovereign, I believe it's 916. Is that correct, Stu?
Yeah,
Yeah, it's
9167. Yeah, 22
yeah,
carat. The sovereign is
yeah,
20
yeah.
carat and will
It's
always be 22
tw
carat.
yeah, yeah.
Okay. And
So
my
that way,
understanding is that makes it a longer lasting circulating coin.
yes, it would. Yes, it would just be a little bit more hardier than the 24 carat, obviously, because it would have a another metal in there, such as it, it really depends. Obviously, at the moment, it is copper. That's probably one of the hence why it has the red gold appearance. But there could be other elements, such as silver. It really depends. Stu, what other metals can be incorporated into it as well, just for historic wise?
Yeah, so in terms of sovereign, the makeup of the sovereign is actually a piece of legislation in the UK. It's actually enshrined in law that the coin has to be 22 carats. Now, that just governs the gold content, but it doesn't say anything else about what the other content was. So historically, we saw a lot of silver in sovereigns, and that's because it was more difficult to extract the silver out in the refining process, and therefore, the color of the sovereign was yellow and it had more silver in it. Over time, what happened was it became easier and more efficient to remove that silver and use the silver for something else. And copper was what was left in the alloy. I said there's nothing that governs the other metals in that coin, so it can be anything. But the copper content increased over time because it was cheaper, because it was more efficient to use that silver elsewhere, and that's why the coin became this kind of rose gold red color that you see today. The implementation of yellow gold again, going back to the sovereign's history, the sovereign as it should be, if you like, would mean that we're taking some of that copper out and replacing it with silver to give it that yellow color.
Oh, great. Talking about the design, St. George obviously is used on a number of them. I see he still has the straight legs for riding the horse on the new coin, so I like that throwback. But the design on the Britannia, both the coins and the bars, could you guys talk about that a little bit?
Yeah,
Stu, I
do,
hand that
do
over
you jump
to
in?
you if that's okay.
Yeah.
Yeah, yeah.
So the on the Britannia coin, that is a design by a very well respected sculptor called Philip Nathan. And that design was created in 1986. There was a big national competition of different coin designers to pick a design, and ultimately it would be the Raw Mint Advisory Committee, who basically a government body that decide what's appropriate for UK coins, picked this design by Philip Nathan, and the chair of the Raw Mint Advisory Committee was Prince Philip, who was the late Queen's husband. So they picked that design as their favorite one, and that has been the kind of the mainstay of the bullion coin ever since. On the bars, it's a slightly different interpretation of Britannia. So the designer there is Jody Clark. So Jody Clark was the designer behind the Queen's Beast range, hugely popular in the kind of numismatic coin collecting world for some of his incredible designs. It's a more kind of contemporary vision of Britannia on the bars, but still clearly recognizably Britannia. So she still has the Corinthian helmet, she still has the trident. Uh, she's still that kind of warrior figure looking out to sea, guarding the shores of Great Britain. So two different designs, but ultimately both hark back to that long history of Britannia, which dates back to the Roman invasion of Britain and Roman gods.
Fantastic. Now, I am aware that we've probably gone over a little bit on time, and it is also getting later into the evening where you guys are across the pond. So before we sign off, though, I just want to extend a sincere thank you to our partners at the Royal Mint. Chris, Stewart, and Louise, thank you so much for sharing your time and your expertise with us today. I really enjoyed it, and I'm sure our clients will as well. Thank you, of course, to everybody who has joined today. So your interest, questions, and support make these events worthwhile, and we'll continue to offer them moving forward in the future. Now, if you'd like more information about products from the Royal Mint or how to incorporate them into your portfolio, please don't hesitate to reach out to the SWP team and your account representative. So until next time, take care, and thank you, everybody, for joining us.